Hi you guys, I am back with another video. So I have decided to do a 5-part series about all things credit. And what it's going to do is it's going to give you different information on building your credit or obtaining credit or avoiding finance charges, interest, best cards to use, short-term, long-term credit cards, all things credit. We're doing a series, all things credit. So this first episode is going to be about how to build your credit, right? Because we all know that the best way to build your credit and to maximize your credit is to get credit cards. And I know a lot of people don't like the fact that they would have to get credit cards, but credit cards have been proven to be the most effective, the fastest, and the easiest way to build your credit. So I'm going to give you a few ideas on how you would go about doing that. This is simply just to start to build your credit. So for individuals who have low credit scores or some that don't have a credit score at all, there are cards that you can get that should be easily obtained for approval, but they do charge you fees. So cards that we normally recommend to our clients are First Premier Bank and also Credit One. Because they are the easiest to obtain credit because they are credit building credit cards. They are for individuals who either have low credit scores, bad credit, or no credit at all. So with these cards, you will have to pay a processing fee, annual fee if it's an annual fee, and sometimes even a monthly fee. And this is for those individuals who really want to build their credit. You may have to do this short term in order to get started with building your credit. So what they do is they may approve you, let's say for $300. Your annual fee may be $99, processing fee may be, $75. When you get the card, it may only be $125 on the card available, because they've taken the processing fee and the annual fee from the available credit. What we recommend to our clients is that you go ahead and make the payment in full. Even if you can't make the payment in full, you can make the payment in two payments. Depending on when you pay the entire balance off, we wait on the credit bureau to update your credit score. And from there, your credit can go anywhere from 30 points up to 80 points up, just depending on whatever else you may have on your credit, or if you didn't have any credit at all, it may take a little longer. But 30 to 60 days, when your credit updates, your score has skyrocketed, right? So with that being said, the card is meant to help you to start to build your credit. It is not meant to be a long-term credit card, in my opinion. So what we always recommend is once your credit score has started to go up and you have started to show this revolving credit history with this card on your credit report, we recommend, because you've already paid the annual fee, so you're good for a year before they charge you that annual fee again, right? We say anywhere from 6 to 8 months, go ahead and start looking for another credit card. If you have been making those payments on time, using that credit card responsibly, then there should be other credit card opportunities out there for you, to where you can get a card that may have no 0% interest for 12 months or 18 months, or a credit card that provides that you not have to pay an annual fee, or just a card that may have an even higher credit limit. Now, I know a lot of times people say don't close credit cards, but I don't believe that these cards that charge you the fees are meant to be long-term credit cards. They are there to do exactly what it is that you need, which is to start building credit. So under normal circumstances, I would not say close a credit card. But yes, if you're having to pay an annual fee every year and maybe paying a monthly $8 charge just to have that card, I say close it. But don't close it until, of course, you have obtained another card where you're in a better situation, whether it's no interest, even if they charge you interest, as long as you're not having to pay an annual fee every year and you're getting better service than what you're getting, then close that card out. I would much rather take a 10-point hit for closing an account opposed to having to pay another $99 annual fee and then paying $8 every month just to have that card. Because what they're doing is they're charging you for the convenience of assisting you in building your credit. So if you're doing $8 every month times 12, that's what, $96. So you've paid $96 over the years just to have the card, and then you turned around and paid $99 for the annual fee just to have it for another year. That's already $200. Waste of money, I say. But again, if you cannot obtain another credit card, then by all means keep that card open until you have established a good credit history, to have that card for a long period of time until you can get another card that's better. But if you can get one, that's why I say start within 6 to 8 months after you've gotten that card and you're paying on time. All of that works out, and then you can close that card out. But it is meant to build your credit. First Premier Bank, Credit One Bank. Best cards to use in order to build your credit if you have bad credit, low credit, or no score at all. So for you guys who want to be able to obtain, auto interest rates that are 0 to 5%, start building your credit. I have had several clients that have obtained these cards who did not have scores at all, and their scores started out anywhere ranging between 650 and 680. Now, these were individuals that did not have scores originally to start with. Individuals who have not so great credit or just not a lot of credit, their credit scores would range, as far as once it updated, it would range anywhere from giving them an additional 30 points to maybe 50 points. It just depends on whatever else they did have on their credit. If they had some type of negative impacts on their credit or collection accounts, it's gonna vary depending on each person's credit. So you have to keep that in mind. But credit cards have been proven to be the most effective way to either start repairing your credit or building your credit. I have had several clients that have obtained these cards who did not have scores at all, and their scores started out anywhere ranging between 650 and 680. Now, these were individuals that did not have scores originally to start with. Individuals who have not so great credit or just not a lot of credit, their credit scores would range, as far as once it updated, it would range anywhere from giving them an additional 30 points to maybe 50 points. It just depends on whatever else they did have on their credit. If they had some type of negative impacts on their credit or collection accounts, it's going to vary depending on each person's credit. So you have to keep that in mind. But credit cards have been proven to be the most effective way to either start repairing your credit or building your credit.